Good afternoon, everyone, and good morning or good afternoon or good evening to those of you joining us on the webcast for the latest installment of TechVision, which is our thought leadership series of webcasts and lectures on topics of emerging and disruptive technology, which we think are particularly important for Thomson Reuters and our customers. We're coming here today from Canary Wharf, the centre of London's financial district. And I think everyone would recognise that the last few years at least have been pretty turbulent for the financial markets and financial services. We've seen pretty catastrophic failures and collapses, collapses in confidence as well as collapses in financial firms. And off the back of that, an increasing level of regulation and then the unrelenting drive to reduce costs and to improve margins. Alongside the market changes, there's also been probably an unprecedented level of technology change as well. Those of you that have come along to previous events here will have heard us talk about gamification, predictive analytics, platforms, mobile, all sorts of pretty amazing technologies that are really changing the way we look at things. And that whole nexus, that combination of changing markets, changing technologies, we've seen emerge from that things like crowdsourcing and crowdfunding, lending circles, digital currencies, and so on. But I think the one that's captured my imagination the most is the company we're going to hear from today, eToro, which seemed to pull together an amazing array of what we think of as being really interesting technologies with a fundamental shift in thinking about social and social in the context of the financial markets. So I'm delighted to be joined today by Yoni, Assia, the founder and CEO of eToro.
Hi. So I wanted to talk about what is the next big revolution in the internet, and that's the convergence of the social web and finance. So I'll start by talking about myself. I'm a financial geek. I've started both trading and developing when I was 16. And as an example of that, when I got enlisted to the Army, I was actually standing in the phone booth talking to my house, to my father, asking for quotes, standing with my Army uniform and the M16. So yeah, I've always been into trading and investing. I founded eToro when I was 26. I have 2 kids and married to one. And when I started trading, the world was very different. This was really the beginning of the internet. Most of things were done still over the phone, and nobody really knew the impact of the internet at all. So someone once told me that back then when he IPO'd his company, he had to explain to people that the internet is going to be this next big thing and that the internet is going to be big. And that's where I believe we are today with social finance. Because everybody wants to be an investor. So even in my high school, when the market started going up at the first dot-com bubble, then everybody started asking me where the market's going, what should I do? So I suddenly became the stockbroker of my high school. But the fact is that most of the times, people can't really access the markets. So when the markets are down, and most of the times, the majority of people are afraid of accessing the markets. Actually, finance is perceived as something sort of antisocial. The sentiment against banks, finance, brokers, etc., is at an all-time low, I would say, post-2008. And actually, finance is something that is extremely social. Finance is all about communication between people. So I don't know how many people here in the audience are familiar with this specific coffee house, Jonathan's Coffee House. But this was a coffee house in London that actually was a place where stockbrokers met and exchanged ideas after they actually got thrown out of the Royal Exchange, who found stockbrokers to be rude. And that coffee house became the London Stock Exchange. So what is the London Stock Exchange today actually started as this social place where 150 people went to drink coffee and talk about the markets. The only problem is that this hasn't changed enough because it's still a very few people that actually communicate around the markets and actually connect directly to the exchanges. And that's exactly the point. Around the world, finance is still very local, the actual ecosystem, so very few institutions in every country around the world are dealing directly into finance. It's still not perceived as really mass audience, and not the majority of people are still not interacting with investments. The reasons are mostly around the fact that the audience today of finance is institutions. And it's a B2B market where the internet is becoming more and more a consumer market. Finance today doesn't really have the user experience platforms the same way that Facebook and Google. It's not an inviting industry, and it's certainly not about equal treatment for everyone. And starting the last, I'd say, 5 to 10 years, there started a revolution over the internet. Consumerization of basically everything. Products meant for everyone over the internet, and the voice of the regular consumer. So it's starting with all the stories we'll hear about revolution starting in Twitter and in Facebook, and that's really disrupting more communication. That's really disrupting how people interact with one another over the web, and suddenly millions of people can interact with one another, but that's still not the core of transactions and financial transactions over the web. And a big part of social is 3 main elements. The first element is the fact that people just started sharing. They just started sharing everything. So if 10 years ago people would light up their candle in a concert, now they light up their phone and they take a picture and they share it with everyone else. And people are sharing what they eat, people are sharing what they're thinking, and people are sharing on eToro, for example, what they invest in. So people start sharing everything over the internet, which led to the second thing, which is how can you use that shareable information over the internet. So suddenly you get all of that information over the internet, and in the really last couple of years, we started seeing the collaborative economy emerge. Or the gift economy, or the sharing economy. This has different names in different places, but it's all about connecting people, but suddenly creating out of this sharing and this new type of information out there, creating new business models where people can actually create a marketplace, where people can suddenly sell things that they never actually thought they could sell, or just making it much simpler. Whether it's their house when they're traveling, or the fact that their wife is a great cook. So people started sharing everything, and then people realized they can actually monetize and create business platforms based on that kind of sharing and that new information. And then the third part, which is something that's really starting now, but I think Waze is a great example of that, is the wisdom of the crowds. So you have more and more information, and then the second part is people are starting to use that information. So there's an incentive to actually create more and more information and more sharing, because people actually can make money from that information on the web. And now suddenly you can actually use all that information to basically create wisdom that never existed before. So Waze is a social GPS. It's a company that was sold to Google for, I think, about $1.2 billion. It's an Israeli company, and they were the leading social GPS. And what was really interesting is that 5 years ago, most people going to work didn't use a GPS. Most people would use a GPS when they went to a new trip, to a new place that they didn't know how to get to. And I just realized that I started using the GPS about 4 or 5 times a day. Every time I go to work, I open the GPS and I choose the route which is the shortest time to get to my workplace. And that created basically a level of engagement that's probably 100 or 200 times more with a GPS through basically creating a layer of wisdom of the crowd, so I can see where everybody's driving, what would be the fastest route to my workplace, and then I would actually choose the right path and get to my work. But what's really interesting is we've heard that gradually in Israel, because a lot of people are using Waze, then if 4 different routes to work would take one 15 minutes and maybe the longest 30 minutes, gradually all of them took the same time, 20 minutes. And they were trying to figure out what actually happened. And what actually happened is so many people started using Waze that, and everybody would choose the shortest path. They would go there, so it took longer because there's more traffic there, and freed the other places. So suddenly, the entire ecosystem became efficient. Now think about what that means in finance, in the markets, where we are today, and the potential of that level of wisdom of the crowds reaching the markets. And that's really something that's hard to perceive from where we are today, but we're at a point where everything is about to change in finance. Finance today is still very much closed. Finance today is still very much based, I'd say, on the concepts of the Industrial Revolution. And what we've seen, what we're seeing in a lot of other industries is the impact of the social web, or the impact of networks. And the real impact of networks is really the speed of things traveling across the globe and across the internet. So if it took 75 years for the first telephone to reach 50 million users, it took 13 years for color TV to reach 50 million users, then it took 35 days for Angry Birds to reach 50 million users. And now take this concept and try to translate this into financial services, financial assets. So how fast can information travel but actually also create an action? So today it's much simpler to install Angry Birds maybe than to buy a share in an IPO. But how would that look 5 or 10 years from today? We had at eToro, for example, one of our best days ever was the first trading day post-Twitter IPO, because we were talking about Twitter on our Twitter and on our Facebook, and suddenly we had thousands of people coming in just to buy Twitter stock for the first time ever. So it's still not 50 million users, but that's where the entire industry is going. And when it does, it changes the landscape. It changes, so finance is still today larger than the entire technology industry. Finance today is the most powerful industry in the world, moving economies, moving politics, but it still hasn't been impacted by the social web. And what we need to understand is things are changing fast. So this is just, I think this is a great slide showing where China was just 200 years ago, and you can see in the chart where China is going. But what's interesting here is to understand how fast paradigm shifts happen when they start happening. And it doesn't necessarily need to take hundreds of years. So we all remember when we had this Microsoft Intel sort of duopoly around computing, and that changed within about 5 years completely. So the majority of users on eToro today are through mobile, through non-Microsoft platforms, which is mind-blowing. When I tried to get back to developing about a year and a half ago, I started looking at Bitcoin, and I wanted to set up a dev environment, and I used my PC to actually set everything up. So a friend of mine told me, "What, are you crazy? If you're developing, you have to develop over Mac." And I was like, what? When I developed 10 years ago in the Army, I was a programmer then, you couldn't develop anything on Mac. Like, no one used Mac. So these shifts in technology are happening very fast, while shifts in economics or in finance are much, much slower. But these two are now converging. and they're going to travel together, and they're going to travel extremely fast. So when we started eToro, it was really about the fact that we saw an entire industry that's very hard to penetrate to. My big brother, who's my partner at eToro, was actually studying at the Royal College of Arts, his master's in industrial design, and he was invited to Bloomberg to help them create this basically space for employees to get highly motivated. And he couldn't tell them just move to Reuters. So when they came in, they noticed something, that the more senior people are in Bloomberg, they get more and more screens. And my big brother is an artist, so he always thought I have sort of an accountant fetish. Since I'm a 16-year-old looking at multiple screens with charts and numbers. And then he started looking at this, and we started brainstorming, and he said, listen, this world isn't really accessible to anybody. I thought always you were my kid brother and you're speaking Chinese, but now apparently there are a lot of people, well, there are a lot of people speaking Chinese. So for him, it's a bit harder. What we realized is this is a very non-B2C, non-consumer space. And we started looking at this space, and we couldn't find any Google-like, Facebook-like platforms. And that really led us to start eToro. And we started eToro with the vision of opening the global markets for everyone to trade and invest in a simple and transparent way. And what we started is with gamification. We created a platform where it's easy to access the global markets, it's easy to access different markets around the world, and we gamified the system. And as part of that, we added these social elements, so people could talk to one another, people could see each other's profile. And very fast, what we've noticed, this was 2007, is that the most engaging part of the platform was the social elements. People actually coming into the platform sort of like cheers and saying, hi, how are you, Yoni? So what have you been trading lately? And asking questions to one another at the very public chat. And we started adding more and more social elements that eventually led us to focus the entire company on becoming the largest social investment network in the world. So we have today 3.2 million users who all share their investments in real time over the eToro platform. So they open their investment account with us, and every investment they make, they publish it automatically on their profiles, where people can see what everyone is doing, and people can follow and copy one another. And the interactions on the platform are extremely interesting, because it's a financial trading platform, but suddenly you see these extremely interesting stories from all around the world, whether related or not related directly to their trades. So we have users from 200 countries. This specific user suggested he'll be donating profit from his trading account to the typhoon in the Philippines. Obviously, this customer is from the Philippines. And you can see people from Singapore, Poland, and India answering back and talking to him about basically the typhoon, the disaster in the Philippines. Different stories are more related to the market. So for example, this is the Netflix stock. So on the platform itself, every person has a profile, and every market has a profile. Every stock has a profile as well. So Netflix recently released the trailer for the second season of House of Cards. And on the Netflix page on eToro, people started talking about what is the next interesting things Netflix can actually issue. And they started asking questions about what can actually generate revenues to Netflix from a content point of view. And they created this retail sentiment, which is, what do we like about Netflix? What do we like to see? What would we like to see coming from Netflix? And how would that impact the stock? So suddenly a stock isn't only what its financial analysts are saying about the stock, but it's the actual retail sentiment and what they're talking and how they're reacting to new stuff, to new releases from companies. And as I mentioned, every person has a profile on eToro as well. And all these people invest in numerous markets. And sometimes these stories of numerous markets interact. So we recently launched Bitcoin on eToro, so people can actually invest in Bitcoin. And then suddenly it got related to all of these other stocks on the eToro platform. So this person is talking about the fact that eBay were suggesting that they're going to accept Bitcoin here in the UK, and whether Amazon is going to do it as well post the Overstock launch. And this guy is from Argentina. And you see people from all around the world basically interacting around topics that now converge both different markets, different stocks, different innovations, and also different people from a lot of countries. Another interesting example was a recent story. I just caught that on our platform around one of the leading TV networks in Mexico. And what we noticed there is more and more people from Mexico are actually buying into the stock. And when we tried to look at why they're buying into the stock, we went to the feed where you saw people from Mexico speaking about the fact that they just are talking about the rise because of the World Cup showing in Mexico. So I'm in Israel, I'm presenting the company to somebody from the UK, and I'm looking at a stock from Mexico where people from Mexico are talking about what's going to impact the stock. And that's all on a B2C consumer level, unlike what is happening today that is more on the institution level. And we have a lot of these stories in eToro, and we're researching these stories on how they impact the bottom line results of users. And we've started research with the MIT Media Labs, and what they did is basically took our entire data set of trades over the past, I believe it was 3 or 4 years. We've now done it with several other universities. And we started researching about how this data actually helps people perform in their actual portfolio. And we found out that manual traders, so people trading without the wisdom of the crowds, basically have negative returns over time, where people using the social trading or using the wisdom of the crowds on eToro are actually performing better, significantly better than manual traders. So it's taking all of that information and actually helping people perform better in their investment management. But what is really the holy grail of what we're doing is what they coined as sustainable trading, is whether people trading the markets and sharing all of that information can actually create sustainable wisdom of the crowds, basically algorithms that constantly look at what everybody's doing and basically investing based on those algorithms to create consistently profitable strategies. So instead of looking now at technical analysis, which is usually looking at the history, or fundamental analysis, which also is looking at the historical data of companies, you can suddenly look at how people are actually interacting with stocks on a daily basis, and potentially from that try to understand what are they doing with these companies' products, companies' stocks, and how is that going to impact the market.